Okay, so this is to answer the question, regarding Frankfurter and Frankfurter Plus. This is to answer the question, what happens if I miss the alert at the time it is given? So even as you can see on this chart here, we have the USD JPY. This is today's alert. The alert came here. Let's make it bigger. Ooh. Okay, so the alert came here pretty much round about just after 8 o'clock in the morning, UK time. So note that, for the Frankfurter box, the box would stop forming, would fully paint, whereby, we have this height from here to here, and from the left to there, the box will fully paint by 8 o'clock. That's for Frankfurter. For Frankfurter Plus, it will be 9 o'clock, give or take. So this is Frankfurter Plus. Never mind, it is pink. I usually would have it as pink when I'm recording so that you can easily see the text, TP and entry and stop loss, and the arrow, of course. So today, what happened was the alert came around 10 past 8 or thereabout. And if after the alert came and you were not by your computer, maybe you were driving or you were in the bathroom or somewhere, and you came, and the alert was, well, the time was around here, what would you do? There are a couple of ways in which you can still enter. Otherwise, you might just have to leave it for the day. One is, in this case, the alert was given here, it pulled back, and then it began to go down in the initial direction. So there was an impulse move from the top, a correction, a pullback. So what would you do? The best thing to do is to wait for the last of the green candles to form and let a red candle take it out. Let a red candle go lower. The reverse would be true if it was a buy. Maybe we'll find time to look at an example. But in this case, let it pull back. You can then enter here, actually, because, this is the pullback. The fact that this has taken it out means that the pullback is over. Or you could wait for it to come back here and you take it. You could have still, won, that trade for the day. So that's one way to do it. Now, that is an example of a sell. Let's look for a buy if we can get one. Let's look for a good example of a buy. A situation whereby it broke above and pulled back. Let's just see if we can see one. This is a sell as well. We'll just look for one more and see. No, we can't find it, or else I'll have to go all the way back. We could be here all day. So anyway, that is basically how you would trade it. Wait for it to pull back. So yeah, wait for it. Well, you're not waiting for it because you found it here anyway. It had already pulled back. So wait for the sell to continue, and then or to resume. Let's wait for the leg down to resume, and then you'll start. So this is a leg down, a pullback, which is a leg up, and then a leg down. Wait for the leg down to continue, and you jump in. So that's one way. I mean, you can even see now, just to show you that this is a strong area of resistance. Initially, it was a strong area of support, but it broke below and it became resistance. If you like, that is a strong, that's a strong area of interest, point of interest, like we call it. Okay, so how else would you trade it? This is the same. This is USD JPY. Let's go to New Zealand dollar JPY. So you can see New Zealand dollar JPY also gave an alert for today, but I have removed the alert so it's not showing, so that we can actually put our own trade on. So what would you do? You would place two orders. You will place two orders. You will place one above for a possible buy and one below for a possible sell. Guess what? You cannot miss the trade. Now, since you know the Frankfurter box fully forms or develops or fully paints on the chart by 8 o'clock, what you could do is by 8 o'clock, if you need to rush somewhere, just place an order for a, using a buy stop order or a sell stop order. And by the time you come back, you'll see that one of them has triggered. This could be a bit tricky sometimes because there are times when the sell will trigger and for some reason, hopefully not too early enough or not too quickly, the buy will go and trigger, which means you are now in two positions. Yes, that happens as well. That happens as well. Just 1 minute, guys. Okay, so that is basically what to do. I mean, place a buy stop and a sell stop, and one of them will trigger. Like I said, I mean, sometimes it could happen that they both end up, being triggered. Yes, it happens. It means you would then be in a hedge position. But I will show you an example soon. But before we do that, just note that when you enter a buy stop and a sell stop, do not enter any stop loss. Because you know that there's a possibility that if the sell triggers, the buy could end up being triggered as well. So you don't want to, otherwise, if you enter a sell stop, by the time this one is triggered and it then goes on and trigger the other one, it's going to hit the stop loss for one of them and open up so you don't want that. I'm sure you know what I mean. So enter a buy stop and a sell stop at the same time, one of them will trigger. What you then want to do is that, you want to be checking it, because you would have entered this maybe around 8 o'clock or just after 8 and gone about your day or whatever. You want to be checking it then after every 10 or 15 minutes or so, because if one of them opens, if this one, like you did, triggers, you then want to quickly come and close this one so that there's no possibility of that one being triggered as well. So this one has triggered, you now come and place your stop loss there. So if you had done that today, this would have been a winning trade. You can see it gave over 100 pips. This would have been a smashing day. Beautiful. So now because the indicator is programmed in such a way that it goes with the trend, well, we don't win all the time, but because it goes with the trend, if it triggers, it's most likely going to continue. But there are the rare exceptions when it triggers and goes the other way. Let's look for an example of that. Let's look for an example of that. Euro, New Zealand dollar. Okay, you can see in this case, this is today. It triggered in the morning after 8 o'clock. The price first went up, triggered here. It gave 18 pips, but if you were not by the computer, it then came down. It then came down and triggered this one as well. So you end up being in both a buy and a sell position. Guess what? Between this entry at the top and this entry at the bottom is about 42 pips, which means you will now be in a drawdown of 42 pips. I don't mind anyway, because I'm sure most of you know now that I enjoy hedging. It means you're not going to be in a hedge position. I don't mind. Hedging is one of my strategies. So with this 42 pips, I would then be looking for a third trade, which is the recovery trade that will get me out of this, drawdown. The whole idea behind a hedge trade or a recovery trade when there's a hedge is to either reduce your loss, completely eliminate your loss, which means a win, or bring you to break even. So you are now in two positions. You now look for a third trade. Hopefully you win the third trade, because if you don't win it, then obviously you are still in you're still in such a position that you don't want to be in. Anyway, so this is what could happen if you were to wake up in the morning after 8 o'clock and place both the buy stop and the sell stop. It could be that one of them triggers and the other one triggers. But what we do want is a situation whereby, like it happened with a lot of the JPY pairs today, only one side was triggered and it went on to deliver. Okay, so I believe that is all you need to know about this strategy. What we call the strategy of opening two positions, one buy and one short, one long and one short, is a straddle. A straddle, STRADDLE. A straddle. A straddle strategy. So like I say, this fully forms at 8 o'clock. So at 8 o'clock, that's when you want to place your straddle trades. For the Frankfurter Plus, which we use for trading pound USD, you want to place it after 9 o'clock. One more thing. Like I said, in previous videos, you want to make sure that, the box is not exact, it's not more than 40, maximum 45 pips. So your stop loss will not be huge. So in this case, let's just assume whatever this is, let's assume it is less than 45 pips. You want with GJ, that's pound JPY, you want it to be that your sell stop is like 15 pips away from the end of the box. So that will be from here to around here. 50 pips away from the bottom and 15 pips away from the top. So that is basically what it is, 15 pips. If it's GU, because GU does not move as powerfully as GJ, if it's GU, use about, maybe anywhere between 7 and 10 pips. Let's just say 10 pips, 10 pips away. You could do your own back testing and see what works best for you. But 10 pips for GU and 15 pips for GJ. And like today, for instance, this being New Zealand dollar JPY, it would have triggered you here and taking the price all the way down. Anyway, hope you have gained much from this, but do feel free to back test and see how it goes. You would win most of the time, most of your trades with the Frankfurter and the Frankfurter Plus. Okay, now